Do you know who got bailed out by Wall Street bet from AMC this week?
A lot of you guys might not know him. He was once the richest man of China. He turned his AMC stake from a deep loss to a 675 million profit thanks to this rally.
Let's call him the Diamond General, but he left the party before we built an AMC on the moon.
I gotta stop with that joke. After that, we'll talk about NVIDIA's earnings and if it's a buy, as it is about to break out from all-time high.
Before we start, be sure to subscribe so you don't miss out on our weekly update and other useful content.
April rally, sell in May. It looks like this May is holding pretty well. Besides, Nasdaq closed the month slightly red. The S&P 500, Russell 2000, and Dow Jones all ended the month green.
Small caps and some of the growth stock had a nice run in the last 2 weeks. This must feel hopeful for many diamond hands holders.
A lot of cash is rotating out of the crypto market from the recent collapse and once again pouring into the popular names like AMC, GME, BlackBerry.
The trading volume for AMC alone was 2.07 billion, and the stock price skyrocketed as much as 200% this week.
What a crazy pricing action. We're going to break it down more later in our video.
Looking at some of the big names like Amazon and Apple are showing some weakness, and Nasdaq is still trading slightly below the resistance around 13,750.
That is a battleground for the bull and the bear. We need to break this critical resistance level to potentially test the prior high.
What is the downside if we fail to break through?
We're likely going back down to test the support level around 13,300 and 13,390.
So looking at the chart is pretty much the same story with the S&P 500, currently testing the upper resistance around 4,200 and 4,215. If we get rejected at this level, we likely pull back just like the Nasdaq and test the support around 4,125.
I need that pullback. Small cap might have more upside into next week as a lot of attention is focusing on some of the popular names. But small cap is still trading sideways between 2120 to 2320 for the last 4 months at least. Nothing really exciting unless we see a break up or down in the pricing range. All right, you guys, the Diamond General J.L. Wang, he acquired AMC for $2.6 billion back in 2012.
So he diamond handed all the way down to $2 and just recently left the party at the end of last week. We are on our own now.
So after he finished selling his 1.5 billion stakes last week, do you think at least some institutions pick up those shares?
Well, you tell me, the stock went up more than 100% just this week alone.
I'm not entirely sure, but here's a list of recent position changes.
I feel like it'd be difficult to tell just because the trading volume is so enormous for this stock. Anyway, beside what we already know, this could be a short screed rally or a market recovery play. What is really backing this type of unusual move?
Market recovery. Isn't it obvious?
Right, but fundamentally, the company market cap literally doubled from 6 billion to nearly 12 billion in just a few days.
Maybe we're just really excited that we can watch movies at the theaters again.
Well, you better hope people go to AMC every week and not Regal. Because looking at Q4 data, AMC was losing about $70 million a week. And with only $1 billion cash on balance, they can only last to 2022, maybe?
Okay, so the company is still losing money, and we're still in the transition phase of COVID recovery. How are you going to convince me to hold at this price?
I think this is actually a tough spot to hold, and we will take a look at the charts in just a bit. It's not a monopoly in the market, and not to mention the pandemic might have reshaped people's entertainment habits from going to the theater to watching movie at home on popular streaming platforms such as Netflix, Disney Plus, and the new company from Warner Media and Discover.
Exactly. The shift away from the movie theater to streaming could be permanent. You can call me cheap, but sometimes I do like to have a movie date instead of going to an expensive dinner. $20 with some popcorn and a shared Coke sounds good to me.
All right. So I honestly don't see any upside potential because their profits has been in decline since 2016 and fundamental were bad even before the pandemic. And they haven't shown any efforts to improve their business models. At least GameStop is setting up their own NFT platform.
I mean, in their defense, they're losing about $70 million. How are they going to pay for new developments? But just a random thought, why don't they do shelf offering back in April instead of a regular offering? Essentially, they have shares ready to be sold at any time. That way, they can sell on the pop without SEC delaying it.
Why would that be a good idea? They would have never anticipated that there will be another short street rally like this one. Given the fact that they were trading around $10, that's 500% off their all time low around $2.
Yes, if it's a regular company, I would agree with you. But the reality is, AMC is not a regular company this past year. They've had multiple spikes without real good reasons besides opening place.
How can they afford the risk that this stock won't tumble down to $2 again or even lower? Mind you, that this company is already filing for bankruptcy. They are in day to day survival mode right now.
Good point. I think by shelving some and selling a good portion as soon as they announce the shelving, knowing the nature of the stock and Wall Street Bet's short squeeze, I'm just saying they might as well try to make some more money so they can at least last longer.
What are the chances that they will see this type of pricing movement again? Shares offering is always a piece of negative news to a company and to its investors. Would you feel confident riding the WSB rally if this were to happen?
No, I would not. But all I'm saying is that it's very likely to have spikes like this once the peak comes down.
Someone's going to take profit eventually, and someone's going to diamond hand the way down.
Can confirm. Just check Twitter. Hella expensive hands over there.
Let's take a look at the chart. The stock is trading at $26. What are you diamond handing for? Their AMC Plus?
Hell no. I rather roll with Netflix. And I'll bet on Disney Plus before I bet on Netflix. But I mean, it's Wall Street bets, so what do I know?
So if you put money into Netflix and Disney, that's more like an investment, not gambling.
You better be careful calling them gambling. Do you think this is a coincidence that AMC was squeezed right after Diamond General sold a stake? I'm just wondering because the timing is just too perfect.
Who knows? These days, people won't chase without seeing a 5% pop, right? Someone on subgroup gotta be the first to pull.
Yeah, maybe there are funds who knew about the dump by Diamond General and try to make a quick buck scooping those shares up and squeezing those 21% short positions.
Yep. Guess we will never find out.
The stock ran up 39% on Friday and tested the resistance around $36, then dropped about 27% after rejection. Do you think they can put together another Thursday, Friday like this one and break through the resistance this time?
This is very possible. There is not much selling pressure on the way up. Likely, we will see some profit taking just like this Friday, which could trigger many stop losses into more selling.
Unless they all diamond hand like how they spam on Reddit. You can call your broker and prevent shares landing for shorting, right? So go ahead and do that if you want.
On the way down, $22 could act as an effective support level.
What about 17?
Yes, 17 could work too. And if 17 can hold, we'll be looking at around $13.
Let's quickly go over NVIDIA's Q1 earning. We have your classic double beat. Revenue 5.66 billion versus 5.41 estimates, and earnings 3.66 adjusted versus 3.28 estimated per share.
Not only that, record revenue in gaming, data center, and personal visualizations. However, the automotive area is a little limpy, down 1% year to year, but still up 6% from last quarter. Check out the table in front of you with all the year over year growth.
I'm liking the operating income growth to expenses ratio, up 100% in income and only up 63% in expenses. When it's making more than $1 back on every dollar spent, that means the company is very efficient in spending its cash and managing its cost.
I'm not surprised at the year over year growth anymore. A lot of companies achieve great year over year growth. So when that happens, I tend to start comparing quarter over quarters. NVIDIA grew 13% from last quarter. And look at what you just mentioned. Is operating income quarter over quarter is up 30%, and operating expenses is only up 1%. Very nicely done on cost control.
Indeed, let's talk guidance. NVIDIA forecasted a 6.3 billion in revenue, which is 11.28% quarter over quarter and 63% year over year.
So the growth margin is expected to be 64.6%, and the operating expenses will be about $1.76 billion. If you direct your attention to the screen in front of you, you can see that the net income will be about $2.3 billion. That's about 21% growth quarter over quarter and 63% growth year over year.
That's sweet. Good year-over-year growth and quarter-over-quarter growth as well. NVIDIA usually doesn't give full-year forecasts, but it usually gives conservative estimates, so we're not worried about them beating their own projection.
I think if we are only consider growth rate and profitability, NVIDIA is undervalued compared to a lot of small cap growth stocks. We want to highlight that it is kind of rare for a company to bring in this much revenue and still growing at this rate.
So why did the stock drop about 1% after earnings? I mean, we know that the shares have run up a lot once the split was announced.
One of the reasons is because of supply shortage. Crypto mining has been going banana this past quarters, and miners have been stacking GPUs, so a lot of gamers aren't able to get their hands on the RTX 30 series.
Those assholes. No wonder the price on eBay got jacked to over $2,000 when it's only $700 on the official website. But NVIDIA also noticed this. So it tinkered with some software on the RTX 30 series to lower its value to miners. It reduced their Ethereum mining capabilities by 50% and carry a low hash rate.
But that doesn't mean that NVIDIA doesn't want miners' business. It developed a miner dedicated GPU. The CMP series don't do graphics and lack display outputs, which is improve airflow while mining, so they can be more densely packed. CMPs also have a lower peak core voltage and frequencies, which is improve mining power efficiencies.
Even though NVIDIA said that it won't impact the supply of other GPUs, consumers said that the Ampere chip it would be using is already in shortage. Not only that, but once the crypto mining hype is over, I don't think these CMPs will be much used and it will go straight into the trash.
Yeah, and that would cause an environmental problem. Looking at the CMPs from the financial standpoint, I think this is going to be great for NVIDIA since its announcement. It achieved 155 million in revenue in Q1 and is projected to have 400 million in sales for Q2.
Quickly on the data center, the revenue is up 79% year over year and 8% quarter over quarter. And partially thanks for the acquisition of Mellanox Technologies, NVIDIA also predicted a faster growth into the rest of 2021 due to an increased demand from economic recovery.
With that, they announced their new Bluefield 3 DPU, the first data processing unit built for AI and accelerated computing. This DPU is so powerful that the data center service it can provide is equivalent to the power of 300 CPU cores combined.
Sounds like NVIDIA is not only overclocking gaming products, they're overclocking all their products. They're not only powerful, but also applicable to markets such as cloud computing, AI, robotics, self-driving cars, to genomics and computational biology.
The next area is professional visualization. The revenue grew 21% year over year and as well as quarter over quarters.
They also launched NVIDIA Omniverse Enterprise for real-time 3D design and collaboration. They already got BMW, Foster Plus partners, and WPP as their customers.
The next area that we are going to talk about is not so flashy compared to other area. Automotive revenue is down about 1% year over year in the recent report, and for Q1 2020, it was already down 7% year over year from 2019.
Remember around the same time last year, actual EVs were selling very well without supply issues? I believe the 1% lower, well, everyone believes that it's because the chip supply shortage, which means car manufacturers aren't able to deliver more cars, so they were fulfilling less payments to NVIDIA.
Seems like the situation is getting better though, up about 6% from last quarter. It is possible that the chip shortage is recovering a bit since then.
But I think despite the bad performance, NVIDIA launched new platforms, software, and processors dedicated to automotive. A lot of them are AI and self-driving related, so there's still hope for NVIDIA to turn this around in the future. But even if it grows slower, it won't impact NVIDIA much since its revenue is only 154 million, which is less than 3% of the entire revenue. If NVIDIA can jack this rookie number up,
I gotta pump those numbers up. Those are rookie numbers in this racket.
it would be very nice since the self-driving market is going to be massive in the future.
Let's hope so. So what else do we not know about NVIDIA? They have the rumored new GPU released on the Memorial Day.
It would be interesting what the GPU would be for, pure gaming or crypto mining.
Anyway, I think the new product is not going to affect the stock price as much as the ARM acquisitions.
Speaking of which, analysts think that there's only 10% chance of UK approving a deal due to anti-competitiveness and national security. And frankly, I agree with them.
How come? I think ARM is the architecture designer for mobile phones, but they don't actually design the chip itself, so it's not competing with NVIDIA, AMD, or Intel.
You're right about the architecture design. And companies like NVIDIA and Apple basically buys the IPs from ARM architecture to design their chips like RTX 3090, your Apple chips, your A14 Bionic, your M1 Mac chips. Imagine this. You and your competitors all need something from a single supplier, and now you're acquiring that supplier. It makes you super powerful, right? Not to mention, ARM's architecture design is not only applied to mobile devices, but also into different sectors such as automotive, smaller IoTs, and embedded systems.
Okay, so by acquiring ARM, NVIDIA would learn a tons of different sector trends close to real time.
Exactly, and that gives them a lot of power.
And then even if UK approves the acquisition, and that's still a big if, China has to approve the ARM acquisition as well. We know that since most smartphones use ARM's architecture, it will be disastrous for ARMs to fall into the hand of the US company.
Correct. It would be another way for the US to sanction China.
True. Anyway, the deal would likely be closed in 2022, so the market will have time to digest the country's approval in stage of acquisitions. What about the stock split then?
There are rumors that NVIDIA is trying to qualify for Dow, and the stock price already ran up or on the split news. At this point, I'm not sure if chasing for the split is a good idea anymore. But speaking of stock price, let's take a look at the chart, shall we?
First support, we are looking at 590 to 612. Below that, we have 565 to 570. These two are relatively weak supports.
We have a strong support from 480 to 500. If NVIDIA gives us a chance to buy between that zone, I'm a buyer personally. What about you?
I would definitely take stock split into consideration. Usually, stock drop quite a bit post-split. Tesla dropped about 35% and around 25% for Apple. So if you haven't opened a position in NVIDIA, you might as well wait for the price to stabilize after the split.
I would love to have NVIDIA drop 25%. I mean, a lot of people are going to hate me, but on the other hand, I think we could give it about 3 trading days to safely close above all-time high. Set your stop around 651 and make sure to execute the stop loss and you should be fine. Would you buy the breakout?
I might, but all things considered, the semi-sector is not looking so hot lately. This might be a burden as NVIDIA is currently testing the all-time high. Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.